Hey guys, welcome back to my channel. Now, if you're new around here, I'm Nima. I've been a corporate executive with over 15 years of experience in both sales and finance. My videos break down complex financial concepts to help you on your financial journey, whether you're just starting out or if you're already a seasoned pro. So thanks for clicking in, and let's jump into today's topic, which is 8 personal finance terms you need to know ASAP. All right, guys. So have you ever asked yourself, do I really have a handle on all of these financial terms that are just out there? Trust me, many of these are really simple, but they just go over our heads, and many of us ask ourselves what those terms are or what they actually mean. Now, if there's even a single term that you don't know about or that you've recently learned, drop it in the comments below. As we all get interested in personal finance terms the moment that we grow older, it's good to learn this stuff sooner than later. I would say that these terms are pretty important in your fundamental understanding of personal finance and, more importantly, making more money. So, I'll tell you all about myself first. I used to be in the dark about financial numbers. I'm still relatively young now, but I figured out at an early age that if I don't stay on top of my finances now, I could really struggle into my late 30s, 40s, and so on. But the moment I took a deep dive into the understanding of personal finance, my money situation actually started to look a lot better. And if you're nodding your head along feeling a bit unsure about your financial future, then I'm happy that you clicked on this video because I made this for you. Now, in the next few minutes, I want you to sit back and relax as I walk you through the 8 most crucial financial numbers you need to know in the next 24 hours. I say 24 hours because if you continue to push this off, it could really have a negative impact on your decision making and your financial future in the long run. And the cool part is, understanding this info is not very complicated. It just takes time and repetition until it is ingrained in your brain. So, no excuses, let's go ahead and get this knowledge and have a good time doing it. Now, before you can start owning your financial game, you've got to know where you stand. And these terms, well, they will take you there. So let's go ahead and dive right into it. First on the list is total assets. Total assets refer to all the valuable things a company or an individual owns. It includes everything from cash and property to investments and equipment. Essentially, this is anything of value that contributes to a person's or entity's financial worth. There's a simple calculation to determine your total assets, and that is your total assets equal your liabilities plus the owner's equity. Or in an individual's case, the individual's equity. Some examples of assets are cash, inventory, building, furniture, and accounts receivable. And some examples of liabilities are loans, accounts payable, sales tax payable, and debts. Understanding total assets matters because it shows how financially strong someone or a company is. It helps with the investment choices, it affects loan approvals, it guides business decisions, and it measures how well an individual or a company uses its resources and is essential for financial reports. Now, on to the second must-know term is your net worth. A person's net worth is the value of everything they own, including assets like their savings, their properties, their investments, minus all of their debts like their loans, their house mortgages, and any outstanding bills. The formula for calculating net worth is net worth equals total assets minus total liabilities. So for example, if you would gather all of your assets again, like your savings, investments, properties, and subtract all of your liabilities like loans, mortgages, and debts, you now have your net worth. Now, I do want to let you guys know that calculating your net worth might feel a bit overwhelming at first, but don't stress if it's not what you expected. It's just a snapshot of your current financial state, not your ultimate financial destiny. Knowing your net worth helps you understand if you're getting wealthier or accumulating debts. This knowledge guides decisions like setting realistic goals, making smart investments, and planning for the future. And honestly, I've been there. I was able to transform my net worth from only having $20,000 at one point to 7 figures after many, many years of saving and investing. I'm here to let you know that you can do it too. Now, moving on to the third term on my list is your credit score. Now, for a lot of the younger generation, they are still new to the idea of credit and what a credit score actually is. Here's a simple breakdown. A credit score is like a grade for how trustworthy someone is with borrowing money. It shows how likely they are to pay their loans loans back on time, helping lenders decide whether to lend money to that person at what interest rate, and so on. Credit scores range anywhere from 300 to the low end to 850 on the high end, and they matter because they affect loan approvals, interest rates, and access to better financial opportunities like renting or getting lower insurance premiums. Now, a good score opens up doors to more favorable terms and saves money in the long run. So building your credit, checking it regularly to catch any errors on your credit report, and paying it back on time makes you a responsible and trustworthy borrower. If you just think of it as your friend letting you borrow money and you promise to pay it back on time over and over again, eventually you will build trust with that person and they won't doubt letting you borrow their money because they'll know that you'll pay it back. The target that you should want to reach is around 700 or above for a good credit score. Now, before I dive into the fourth term, if you found this video helpful so far, I'd really appreciate it if you could smash that like button, leave a comment down below, and subscribe. Your support helps the channel grow, and I'm all about providing free helpful content without charging for a course or anything like that. I have opened up my YouTube memberships on my channel, so if you are interested in signing up for more financial assistance, feel free to do so. Now on to number 4 on my list of terms is your monthly income. In simple terms, guys, your monthly income refers to the total amount of money you earn before deductions or taxes are taken out within a single month. This is actually known as your gross monthly income. On the other hand, your net monthly income just refers to your gross monthly income after all the deductions and taxes have been removed. This can include wages from a job, freelance earnings, rental income, or any other regular sources of money received during that month. I think this goes without saying that knowing your monthly income is like having a financial compass. It guides you on how much you can spend, save, and plan for your future. It helps in budgeting efficiently, managing debt sensibly, and making sure you're prepared for unexpected expenses. Plus, it's key for setting financial goals and making sure your lifestyle fits your income. Now, number 5 on my list is your discretionary income. Discretionary income is the money that is left over after paying for necessities like your housing, your food, and your bills. It's what you have available for non-essential spending or saving. Basically, it's your disposable income for things that you want but don't need to survive. Now, understanding discretionary income is key because it shows how much money you have left over to decide whether you should spend it or save it. Now, if you are some of the lucky few that have discretionary income to save, then pat yourself on the back because that is no easy accomplishment. Many people that live in America are living paycheck to paycheck and have no discretionary income remaining. But again, if you are one of the lucky ones with discretionary income, then it helps provide the freedom to enjoy life through hobbies and vacations while also allowing for saving and reducing financial stress. It helps you strike a balance between essentials and extras, promoting a healthier financial life overall. It can also be your cash for emergencies, paying down debt, or making smart investments. Now, number 6 on my list is the term 401k. A 401k is a savings plan for retirement provided by employers. It lets you save part of your paycheck before taxes, and sometimes your employer adds more money to your savings. This money grows over time until you retire, and then you can take it out and use it. Having a 401k is really a place to allow you to have money saved for when you stop working. Unfortunately, not many people are able to work forever, and you need to have a safety net when you're older and unable to earn income like you used to. In addition to all of this, it's even more helpful for your taxes because every month that you get paid, you owe taxes on that money. But if you invest some of that money into your 401k, then your taxable income is less since you put it into an investment. Now, if you're wondering how much money should I have saved in my 401k, well, having a good amount in your 401k depends on what you want when you stop working. However, experts often suggest that saving between 10 to 15% of what you earn each year before retirement is right around where you should be. But I can give you some quick examples. By age 50, you should have about 6 times your salary in your account. By age 60, you should have about 8 times your salary working for you. By age 67, your total savings goal should be close to about 10 times the amount of your current annual salary. So, for example, if you're earning $75,000 per year, you should have about $750,000 saved. Now, the seventh term on my list is interest. Interest is the cost of borrowing money or the earnings on your invested money. When you borrow money, you pay interest as a fee for using that money. On the other hand, when you invest or save money, interest is the amount you earn over time on the initial amount deposited or invested. Knowing interest helps you understand the extra cost of borrowing and the additional earnings from savings or investing. It guides decisions on managing debt efficiently and choosing the best ways to grow your money over time. This, of course, ultimately impacts your financial plans and your overall wealth. So just remember, guys, to keep your tabs on all your interest-related expenses, especially for things like your car loans, mortgages, and credit cards. I'd like to think of it as being the conductor of your financial orchestra, making sure everything is in tune, but with a rhythm that suits your lifestyle. Now, the eighth term on my list is debt-to-income ratio. The debt-to-income ratio is like a comparison between the money that you owe each month, like loans and credit cards, and how much you earn before taxes. You calculate it by dividing what you owe monthly by what you earn monthly. It helps lenders see if you can comfortably handle more debt or if you might struggle to make payments. A lower ratio is usually better because it means that you owe less compared to what you earn. In addition to this, it also gives you an idea of how much your income is going towards your debt payments, aiding in better budgeting and financial planning. With that being said, by taking a look at this chart here, a healthy debt-to-income ratio would be below 35%. If you are between 35% to 50%, you are still okay, but maybe borderline more towards your debt side than your earning income side, and then anything above 50% would be considered unhealthy. But there you have it, guys. These are 8 personal finance terms that I feel are game changers for taking control of your finances. I really didn't learn much about these terms until after I was done with college, and I wish I had someone to teach me this as I was going through the process. Now, I challenge you to spend the next 24 hours getting to know these terms inside and out. If you found this video helpful, please go ahead and share it with anyone who might be interested in incorporating some of the lessons in their life. If you have your own financial experiences or suggestions, don't hesitate to share them down in the comments below. And of course, don't forget to smash that like button, subscribe, and ring the notification bell for more videos every week. I'll catch you all in the next video.